Hello traders and investors, welcome back to the Trend Trader channel. It's been a while since we had a video, but we were busy with other things. Such things happen in life. So in today's video, I want to give you an update on the 10,000 Rand stock trading challenge. So we'll be looking at the performance that we saw in February 2023. So a lot of things has happened in the stock market. So I'll be sharing with you what happened with regards to our portfolio and also with regards to the challenge where we had some challenges and where we need to improve our approach in the stock market. So before we proceed, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please make sure that you smash the like button. And as always, we always appreciate your feedback in the comment section. So when we're looking at the information that we generated last month, you can see that some of the trades, remember when we started, we mentioned that we have positions that we brought from year 2022. So all the trades that are recorded here, they include some of the positions that came from 2022, but we did take a couple of positions in February, and we'll be covering those positions that we took in February. So for some of the positions, previously we mentioned that we have a position on Process and Naspers, and also we mentioned that we had reduced our position on Discover. So we still have our shares on Discover, but at some point we did sell a small portion of our Discover shares because we wanted to take a position that ended up in a loss, and Discover is still on profit. Like I said, such things they happen in life. So everything that is marked as blue are the positions that are closed. So some of these positions were closed in January, but some of them were closed in February. So looking at some of the closed position, we have Naspers. We no longer have a position on Naspers. Our trailing stop loss was hit. We don't have a position on Process anymore. Again, our trailing stop was hit. So with Glencore, and this week, our position on Woolworths also hit a stop loss, and then we managed to exit that position. Sibanye, we're gonna cover Sibanye a bit in brief because we did not handle that position well. That is why we marked it orange there. So we also took a position in Sasol. That position also it ended in a loss, but we had some stocks that we closed for profit. At this moment, we still have about 8 or 10 positions in different companies. We added a position. Okay, we've had the position from Outsurance. I think since January, we have a video where we covered Outsurance, but we took a position on MTN, BHP Billiton, Hosken Consolidated Infrastructure Group. We took a position on Standard Bank, Ab-Inbev, and Bidcorp. One of the interesting things that is happening in the market is the different how the stock prices of Ab-Inbev and SAP Zenzelekabili are performing. At this moment, we saw that since the beginning of the year, Ab-Inbev has done well, but we only took a position just around the 28th of February. So we are new Ab-Inbev shareholders, unlike the people that have had the shares for quite some time. You can see just before the end of February, we took a position on Ab-Inbev, and we took a position on Bidcorp again. So far, most of our positions that are still open, they are still in the red, as you can see there. Well, it's only Discovery that is somewhere around 9.44% that is performing okay. We see Outsurance is still somewhere around 15.13%, and Absa Group is just barely at break even. So things are all over. So you can see some of the trades that we took. We have some breakout trading. We have stocks that are respecting some moving averages. The reason why we want to know the kind of trade type so that you can see which setup give us better profitability, because not all kinds of setup are going to work out the same. We can use moving average. Other people, they use a Fibonacci retracement. You can use a lot wave, value investing, fundamental analysis. all different kinds of ways of making a decision of what to buy. So you need to have an idea which of those approaches give you decent results, so that you can capitalize on those or on that approach that gives you better result. Because at the end of the day, we just want to make money. We don't want to use a certain setup just because we are comfortable with that setup. If that setup is not making us money, then there's no point using that particular setup. Okay. So now when we look at the closed positions, you can see now we have closed 10 positions. This time I just verified to ensure that I give you correct information. So it's 10 positions that are closed. Some of the companies, they are coming from the same companies. You can see we closed 2 Naspers position. We closed 2 Woolworths positions. So yeah, it happens. We just trade all the stocks, but obviously we don't invest in all the companies. We take positions in the companies that are giving us decent setups with what we see as low risk setups. And maybe if there's a possibility that the share price can go higher, then those are the kinds of setups that we are looking for. We don't just buy companies that we like. Remember, here we are trading. Well, some positions we can hold them as long as they are profitable, but at the end of the day, the end goal is to make money. It's not to just be a mere shareholder in the companies that we like. So now, based on the companies that we have here, is you can see that Woolworths and Investec were closed in March, but in February we closed the position on Sibanye. You can see we closed that position for a loss that -1R. Then it indicates that we only took 1%, not 1%. We only took 1R, so negative R in this case is 10,000. Our 2% risk is 200 Rand. So ideally, we took a risk of about 200 Rand per share. But the money that we lost there, you can see it's 96 Rand instead of 200 Rand. So every negative 1R should equal at least 200 Rand, and every positive R should equal 200 Rand or positive 200 Rand. So far, overall, since we started this challenge, we have traded or made 10 transactions. 2 of those trades were losing trades. So it means that at this moment we have an 80% win rate, because we have 8 trades that are profitable out of 10. But now we need to look at the average gain of those positions. We see we make an average of about 12.32%, which is not high in terms of average win. And then our average loss, it's a negative 8.94%. So it's just slightly less than what we are making. But now, when you look at the expectancy, which we just sum up all the R's that we're making, and then we divide it by the number of trades, we can see that we have a positive expectancy. That is something that we need to maintain if we want to make money in the stock market. But the real question is, are we really making money in the market? You can see here we have some positions that were closed on profit, but for example, Discovery, we closed this position just on break even. So we just got 20 Rand in that position. So that is not a lot of money. You can see Glencore as well. You said that it was a trailing stop that was hit. So we are just above a break even. So we didn't make money in that position. Then some of the position we are not making the 200 Rand that we should be making. So this tells us that there is a problem. We will share with you where the problem is at. But for now, you can see that some of the positions are profitable, some of these positions are not profitable. So far, it's only 2 positions that were not profitable. So when we look at the balance, previously when we made the video, we were sitting somewhere around 10,200 Rand or so. So now the balance has increased to about 10,400. So it means that in the month of February, we made a profit of about 200 in terms of closed positions. Remember, we have positions that are open. Majority of those positions that are open are in red at the moment. As we close those positions, if our stop loss is hit or trailing stop loss is hit, then this balance is definitely going to change. But you can see that the equity curve it's growing a bit there, so that is it is something that we are happy about. we're looking at R. R is a measure of a risk to reward, what we want to achieve. We want to see more bars on the upside and few bars at the bottom there. Remember, we want to ensure that we want to stick to a stop loss, so it means that most of our position we should exit at minus 1R or as close as possible to minus 1R. So you can see our two losing positions, we are just around a negative 1R, and that is what we want to achieve. Sometimes it happens that the stop, it just gap down, which widened the negative R that you can get there. But if you can control that and get more positive R's, then we can then start to make money. Then when you look at the return on investment in terms of percentages, you can see that that position that we closed earlier from Sasol, that was a 30% gain, is still the largest gain that we've made so far. And the largest loss is negative 11% that is coming from Sibanye. So yes, we do have losses. We don't just make money all the time. And then we record how we exiting those positions. You can see some of them, it was a partial take profit, meaning that the share price of that security had risen up a bit, and then we took some profit in there, whether it's 50% of the position that we closed for profit. Then we let the remaining position to continue to run. But to look at these two positions where we actually lost money, then it was the stop loss that was hit. Then majority of those positions that have low return on investment, it is the trading stop that is hit. Because remember, whenever you take a position, you are actually taking risk, because if the market moves against you, you are going to lose money. So that is the initial risk. Then as the share price move up, move further away from your entry level, then you are on profit. Now the risk that you have is giving back the profit. So it is important that you raise the stop loss at least to first reduce the initial risk amount that you are going to get. As the share price continue to move up, you can then break even. So if the share price comes back to your entry level, you are not going to lose money, but you're also not going to make money. So that is the problem that we spoke about earlier, that we do move our trailing stop at least to just above a break even. Then in February, at least from mid-February till the end of February, then we started to see the market being a bit negative there. And then that is when most of our trailing stop loss got hit. It's not a problem. We understand that as we are using trailing stop loss, those kinds of things are going to happen. So it is something that we need to keep in mind. We still need going to move rapidly in terms of moving our stop loss to ensure that we save those profit that we will have made, because we don't want to waste time taking a position and then giving back all the gains. So that is the problem that we spoke about earlier. So yes, we can see that the equity curve is growing in terms of R. We are getting more plus R, and also the return on investment looks positive there. We have those negative trades there. So now when we zoom in into the data that we're getting here, we can see that our average gain is just around 73 rand. We're supposed to be making a minimum of 200 rand, but we're making 73 rand. Our average loss is negative 78 rand. So you can see we are losing more money than we are making. Fine, at this moment we are being saved by the high win rate that we're experiencing so far. But if you look at the expectancy, you can see that the expectancy is negative. So because the average loss is higher than the average win, despite the high win rate, then we are just going to lose money. You can see the edge or is supposed to be greater than 1, then that is when we're going to make some money. So now if it's sitting here at 0.5, or also the win-loss ratio is just so small, then that means it's a problem for us. But that is coming from quickly raising the stop loss to break even, and also taking that a partial profit. So if we want to maintain a better expectancy, at least the share price should move 3 times on our average risk. So if we are risking 200 rand, the share price has to move up and give us a profit of about 600. Then we can sell half of the shares, which will give us 300. Then we raise the stop loss at least to plus 1.5R auto plus 2R, then that will change the numbers and put us on a positive edge. But you're only gonna get that information if you record your trades. You see when you're making money, you see when you're losing money. If you don't keep a record of that, then you might be thinking that you are making money when you're actually losing money. And that is a mistake that we made in year 2022, because we were not up to date with our journaling. The market was difficult in year 2022. We did try to manage risk management, because we never gonna stop managing risk. We always going to use a stop loss. But because we didn't know in terms of what is our average gain, our average loss, big gain, biggest losses, our edge and expectancy, then it became a problem. Because putting a commission aside, we're actually losing some money, because we had a negative expectancy. So now we are able to see the problem, that okay, we have a negative expectancy, and where it is coming from, and how we're gonna fix that. So far, luckily, we've only traded 2 months into the year. We still have 10 more months to go. So yes, this is worrying, but it is something that is fixable, and we are going to fix it, because that is the whole point of getting, of generating this information, seeing how you're trading. It's like a feedback mechanism, and then you need to improve on that. So that is what we are going to be working on. So yeah, there are some positions. So now when we look at Sibanye, we mentioned that Sibanye, it's that position that we didn't handle well, because at some point the position was on profit, but we gave back the gains. So we bought Sibanye when it just broke somewhere above this level. We're looking at this level here. So we bought Sibanye, I think it was 42 Rand or so per share. You can see that Sibanye went up just above 50 Rand per share before it started to pull back. So our stop loss, even though it was just below 41 Rand per share, and we could have this, because this was at this moment, it was about 2 times the risk that we were taking. At best, we should have put a stop loss somewhere here just above a break even. Then that way we were not going to lose money when Sibanye started to pull back to that previous breakout level. As you can see now, Sibanye is just trading below 37 Rand per share. But this is a position that we mismanaged. We could have done way better from this position. But we know that such things happen in life. Don't be too difficult or don't be too hard on yourself. Just understand where you made a mistake, make a note of that, and try not to repeat that mistake again. At this moment, we don't have a position on Sibanye. We're waiting to see. Look at this. This is the low of Sibanye. So maybe there will be buyers that will buy Sibanye shares. Then maybe we can see the share price is starting to move up there. At this moment, we are not 100% invested. We still have about 20% cash in our portfolio. So depending on any company, not just Sibanye, because we're only going to trade the companies that are giving us the buy signals. We're not going to wait for a specific company to perform better before we buy shares on that company. Right, I mentioned that we took a position on BHP Billiton. Now the share code has changed to BHG. So what we're looking at this share, why we took a position, you can see that there was that breakout from that previous high of about 560 Rand per share. So now the share price, it started to consolidate just above this level, but it did fall there a bit. Fortunately, it didn't hit our stop. You can see where's our stop loss. We always talk about a stop loss. We always use a stop loss. We don't make a mistake of not using a stop loss. We understand that it can be painful when you have to take a stop loss, but it's better because we don't know if the share price fall. We don't know how far the share price can fall. So at this moment, the position is still very much alive. We are still in the red, you can see, because the price is still below our entry price. Our entry price is somewhere around 600 Rand per share. So we're waiting to see how this position is going to perform. Then let us look at Ab-Inbev, why we took a position on Ab-Inbev. This is the name that I'll always use for the stock because this is just too big of a name. So we mentioned that the stock has had a decent run. So if you look here, the stock has been trading between this support and resistance. So you can see the stock is now attempting to break above this resistance level here. So that is why we're interested in this particular stock. But also we are mindful that the other alternative is that the stock it fails to trade above this level and then it comes back to retest this level. So that is why we have our stop loss just below our entry level there, because we don't know how this stock is going to perform. But if the stock does go up, then we won't be surprised if the share price of Ab-Inbev can try to trade and move up to 1,500 Rand per share. We are not predicting that Ab-Inbev is going to go to 1.5, because if it doesn't happen, then what? We are merely saying that based on the chart, the stock has two possible pathways. One is to move up to 1.5, and the other pathway is to go back to about 800 Rand per share, because we are buying or we are buyers of the stocks. Ideally, we would prefer that the stock or the share price it moves up to 1.5. But for the people that have shorted the stock or that want to short the stock, then they are also hoping that the stock is going to fall back to 810 Rand per share. So whenever you make a trade decision, it's always good to have more than one scenario so that you know how to react when the market moves. So we also spoke about MTN, that we have a position on MTN. You can see now it just depends on how far you zoom out. You can see that MTN was moving down before it started to consolidate, moving sideways. Then when it broke above this level, that is when we took our MTN position. This week, there were a lot of stock exchange news services that were coming from MTN. They were reporting, there were reports from all the companies that operate in Africa, whether it's Nigeria, Ghana, every country where MTN operates. Remember, there is MTN Group that is listed in the GSE. Then there's MTN Ghana, MTN Nigeria, especially MTN Nigeria. The stock is listed in the Nigerian Security Exchange, whatever they call it. So those companies have to report, and then all that money, the profit, all the profit in those African companies, then it needs to come back to Johannesburg. Then MTN Group, which is the parent company, is going to come up with the result. So it's great if we see positive result in Ghana or Nigeria, but all those numbers, once they have been consolidated, they need to show up on the MTN Group financial statements. Then that is where we want to see profits. But yeah, so this is where we are at the moment. What we see, the stock is trying to form something that looks like a bullish flag. Then if there is a breakout somewhere on the upside, then we are going to add on our existing MTN position. At this moment, we are trying by all means to be disciplined, to take trades as the setups they come. We are not just trading for fun or taking position just for the sake of taking positions. So it can happen that it can take a while for us to take positions. As you can see, some of these positions, BHP, we started taking them on the 21st of February. So we didn't take a lot of position. We only took 5 positions in February, but there were some positions where the stop loss were hit, and then we were exiting those positions. Remember, we are using easy equities. You can set a stop loss on easy equities, but it costs 0.35%. On top of that, 0.25% standard commission. So it is a bit expensive, but it does help to manage risk. You can choose to exit the trades manually, but if you have other things to do during the day, you might not have the time to check the market. You're just gonna get an email confirming that a particular position has been closed, and you would have paid that 0.35%. For us, it gives us a peace of mind, because we know that most likely we are going to get the exit price that we want. We're not going to get it exactly. Usually it's just a bit lower than that price, but it is better than losing more money because we were busy looking at other things and we weren't able to exit the positions when we were supposed to exit. So yeah, that is all that I think I wanted to share with you. I just want to see what is happening with the HCI chart. Again, it's another breakout. You can see the stock was moving in this consolidation levels. It was trading just in between these two prices, somewhere around 200 rand per share or so. So now we see that it attempted to break above this level, and that was the rationale for buying this stock. Now the stock is consolidating at this level. It can break low or it can break higher. If it breaks higher, then we're gonna start to continue to make money from this position. If it breaks lower, our stop loss is going to be hit. Then we're going to have more negative result in our spreadsheet. So that's it that I wanted to share with you today. Again, if you haven't subscribed, please consider subscribing. And if you found value in this video, please smash the like button. Feel free to share this video. Any questions, comments, suggestions, please leave them in the comment section. We will see you in the next video.